got Sivaramakrishnan Ganapathi, who is the chairman, and managing director at Gokaldas Exports, joining in. Mr. Ganapathi, thank you so much for joining in. Let's begin by talking about the fact that your revenues have scaled up quite significantly on a year-on-year basis, 85%. What has really attributed to this, and do you see the momentum continuing?
Sure. Thank you for having me. The like-for-like revenue on the base case has grown by 28%, which is pretty significant given how the markets have shaped. And we have acquired some entities which collectively contributed to incremental revenue and took our revenue growth to 85%. But even if you look at the erstwhile Gokaldas, its growth of 28% is pretty significant in light of the fact that US imports have been reasonably muted during this period as well. But we see fair amount of demand traction going forward, primarily because most of the brands which were underbuying over the last 1 year have started coming back into the market. Their inventories have been optimized already. They were carrying excess inventory in the past, and now they have come back to a level of normalcy for themselves, and they have started buying more. So this has resulted in a fairly good, demand projection for us going forward, and we anticipate that our growth momentum will continue.
But there is a margin dip of 200 basis points as well, Mr. Ganapathi. What went wrong here, and where is it that you see your margin settling at for the fiscal end?
So the margin drop is primarily because the acquired entities brought down the margins. We are working on correcting their margins as well. So this is a year-long effort. So I'm hoping that by next year we should get back to our traction on margins. In the meanwhile, we've had to deal with a seasonal low orders in some of our acquired entities. Also, we had some production challenges, which resulted in some one-off costs. All of these brought down our margins a bit. Keep this also in mind that till recently, the demand-supply balance was tilted in favor of the buyers, which means there was excess of supply. So we were not in a position to price it into the market, but that's turning going forward. So I'm hoping that plus all the corrective action that we have taken or put in place in the acquired entities will also yield improved margins, and we will get back to our normal margins in the next fiscal year.
When you say demand is coming, is it largely because of demand from existing customers who are sourcing more, or this is China market share gain which is coming to you?
So it's both. So what has happened is last year when the brands brought down their purchases by almost 20-25%, that was a steep drop. So the whole supply chain got impacted from overcapacity, etc. But now that they have normalized their inventory, that purchasing has to come back. Keep in mind that retail sales this year, YTD in the US, and it's generally a trend in Europe as well, has grown by about 3% YOY. Over a 3% growth last year over the year before. So retail sales has been pretty good, which means that brands, once they sort out their excess inventory, will come back to buy more, and which is what we're seeing at the moment. So that's primarily the driver. The China to India effect, which is going on, albeit at a slow pace, may accelerate once the government change happens in the US, but that's yet to be observed. But I believe that some of those macroeconomics are also in favor of India.
Okay. If one looks at this entire view of trade barriers, if one works with an assumption that there would be renewed trade barriers which would come after the new Republican administration takes over in Jan, how could that impact Indian garment exporters? So if you can just educate first our viewers with what the current trade, rates are, and if there's a trade barrier, will India benefit or will India lose?
So US is a high import duty country already. So for cottons, we see import duties ranging from 15 to 20%. For synthetics, it's almost 25 to 30%. So US has pretty steep import duties, and when we produce goods in India, they enter US with these kind of import duties. Just to contrast, Europe, we enter Europe with a 12% import duty. So that's how it is. Now, the import duty regime is similar for all the countries. So we are not disadvantaged vis-a-vis other countries. And if there is a differential, incremental import duty that the new regime may choose to impose, and as long as that applies to imports from most of the countries or all the exporting countries, then I think relatively we're not impacted. However, that will increase the price of garments for the end user, which may lead to some inflation, and it may have some cascading effect, but that's too difficult to predict at the moment, because we have to see how inflation behaves in a total in a comprehensive way, and also how long will it take before inflation catches up. So those are aspects which I don't want to go into because it's too complex, and it's best dealt with economists. But if there are no differential tariffs between India and other countries, and there could be a differential tariff between India and China, which could be to our advantage, then I think we are not worse off for sure.
And the Bangladesh local issues which everyone thought would benefit India, have they really benefited India, or has Bangladesh supply chain normalized?
So Bangladesh supply chain has normalized. Having said that, incremental growth isn't going to Bangladesh because brands are also wary. There's so many more things to play out in Bangladesh. There's an elections which may happen or will happen sometime soon. And there are other uncertainties which is going around in that economy. So brands are trying to, diversify their purchases as well. So there is a huge amount of sourcing out of Bangladesh, and even a small portion of it which is seeking other destinations, other sourcing areas like India, is creating a good demand traction, and we are seeing that as we speak.
All right. Thank you for giving us more perspective as to how business is shaping up and what the outlook is.
You're welcome.
That's the word from the management of Gokaldas Exports. They said that growth momentum will continue. The acquisition of the primary entities have affected the margins. But for now, when it comes to Bangladesh, the supply chain has pretty much normalized and macro favors are in favor of India. Macro factors, rather.
If you like this video, then like, share and subscribe to ET Now.